Crypto investors should be grateful to China for this, according to Anthony Pompliano. Without wasting any time, crypto bulls have already hailed the Chinese government's recent ban on cryptocurrency trading as a boon to the emerging sector. Anthony Pompliano, an investor and podcaster, echoed the sentiments of many long-term investors in the asset class this week during Yahoo Finance's Crypto Investing Summit. Prior to last week, the Chinese government had banned cryptocurrency activities at least 5 times, with the most recent action criminalizing crypto trading and offering any crypto-related services to Chinese citizens. Since the announcement, reports indicate that an exodus of crypto companies in violation of the law, similar to what occurred in May with the country's crypto mining companies, has begun. Binance and Huobi, 2 of the world's largest cryptocurrency exchanges, both suspended new China-based customer registrations over the weekend. However, Pompliano views the crackdown as a positive development for the crypto sector and the U.S. economy as a whole. "This is the most American technology we have today, comparable to the Internet," Pompliano said in an interview with Yahoo Finance. "China is committing a grave geopolitical error here. Now it is up to the US. If anyone is going to benefit from this technology, it'd be prudent for us to ensure that it's us." After plummeting from $45,000 to just below $41,000 in the aftermath of the news, Bitcoin, now hovering just above $42,000, and other major cryptocurrencies are showing signs of recovery. Bitcoin, BTC, Ethereum, ETH, Binance's exchange coin BNB, and Solana, SOL, have all seen gains over the last 24 hours, while Cardano, ADA, and Ripple continue to fall. To be sure, all of these assets were liquidated at the start of the week. To assume that the crypto sector will remain unaffected by the loss of Chinese customers is incorrect. Cryptocurrency trading is declining in East Asia. In light of these concerns, geographic data from the blockchain analysis firm Chainalysis indicates that East Asia, a region dominated by China, has already seen a decline in crypto trading growth relative to the rest of the world. Over the last year, North America and a portion of Europe have outperformed East Asia, which generated the majority of crypto volume the year before. East Asia's share of global transaction volume fell from 31% to 14% between January 2020 and July 2021. While this region's raw volume increased, it did so at a much slower rate than the previous year in comparison to the rest of the world. Despite China's previous regulatory prohibitions, many investors were concerned about the country's potential use of cryptocurrency. For example, China previously dominated both operations and manufacturing in the crypto mining industry to the point where some feared the country would eventually seize majority control of the Bitcoin network. As recently as April, PayPal co-founder and billionaire Peter Thiel expressed concern about the government's potential use of Bitcoin to manipulate global monetary policy. "I'm wondering if Bitcoin should be considered in part as a Chinese financial weapon against the US at this point," he said. For investors who share Thiel's view, this latest move, which follows a similar crackdown on crypto mining in China, may be interpreted positively. Despite near-term price volatility, China's outright criminalization of cryptocurrency could allay these fears, at least for cryptocurrency advocates. Now, by restraining crypto in order to make way for the country's digital yuan, a central bank digital cryptocurrency, CBDC, the country appears poised to use the digital yuan to implement its monetary policy. Cryptocurrency investors such as Pompliano believe that this effort has the potential to increase the value of decentralized cryptocurrencies such as Bitcoin. "We should be grateful to China for this action," Pompliano stated, referring to China's crypto mining industry's dominance. The United States can now accelerate and close the gap with China. Regulation is imminent. Nonetheless, Pompliano's bullish view conveys a sense of optimism about how US regulators will approach cryptocurrencies. After a month of congressional testimony and heated Twitter debates, US regulators show little sign of softening their previously hard stance on crypto assets. It has even been dramatized by some crypto natives as a war against crypto. While there has been no discussion of criminalizing the asset class outright, the U.S. Treasury Department, Federal Reserve, Securities and Exchange Commission, and Congress have all expressed a desire to regulate certain segments of the asset class more heavily. Numerous U.S. officials, crypto advocates and non-advocates alike agree that regulation remains opaque due to the reliance on much older laws that are inefficient for the financial sector's fastest-growing segment. The Commodities and Futures Trading Commission, CFTC, announced a $1.25 million fine against Kraken on September 28 for offering margined commodity transactions in digital assets to U.S. investors. The exchange paid the fine and expressed a willingness to cooperate with regulators, despite a CoinDesk report indicating there was some doubt about the exchange's ability to comply with registration law in its current form. We hope you enjoyed watching and listening to this video. Please let us know your opinion in the comments area below. If you found our content useful, please like it and share it with your friends. Also, don't forget to subscribe to our channel and hit the notification bell for more crypto-related contents.